Easter fell early on the calendar this year, and that proved to be a very fortuitous thing for investors. The Easter Bunny came and left a lot in the way of chocolates and candies for client portfolios, and truly, it's always interesting when Easter falls this early. It's something that I don't think a lot of us are accustomed to, and while the returns for 2023 were strong, I think a lot of people are still very much weary from what the year 2022 brought in terms of volatility in the markets, and so seeing that upward trajectory felt pretty good.
Yeah, no, I agree, and I think the themes that we saw in 2023 were semi-apparent in the first quarter of this year as well, right? Last year we talked about AI and interest rates, and I think this year that's kind of how we started off.
To start the quarter, obviously we had tech had a very strong had a strong quarter, but it wasn't just the Magnificent Seven, and I think that was kind of the first big revelation of 2024 was that the Magnificent Seven was not bulletproof. Where you had Nvidia up 82%, kind of the consumption and the insatiable need for their chips, kind of continuing to grow revenues at incredible pace. But you also had Tesla down 30% almost, Apple down 12%, and I think if you would have said, hey, the S&P was up 11%, you'd probably assume that Alphabet, the parent company of Google, would have been up in excess of that, and it actually underperformed the S&P by 2.5%. So I think that dispersion led to somewhat of a broadening out of the rally, where we saw the value versus growth. I mean, growth outperformed value, but value kept up pace significantly more than it did in 2023.
Right. I think in previous years where you see a market rally that's led by 10 names, for example, you tend to see a lot of volatility, and I think seeing some broadening out it would be pretty healthy for especially U.S. large caps.
That narrowing of the market, if you just have those few names, typically that has historically been a worrisome sign. The second big theme or takeaway is that we're really setting up for what I think is there's one person and one thing that are really going to control the markets and drive the narrative moving forward. For those of you who don't know, Jerome Powell is the chairman of the Federal Reserve, and that he, along with the Federal Open Market Committee, they control interest rates. The market is expecting the first cut to happen by June.
Right. Yeah.
And I think not only does it cut, but why does it cut? Right? Is it cutting because we've got inflation tamped down, the soft landing looks like it's going to happen? That's positive for markets. If it cuts and it's
just something broke, for example, we could see an opposite reaction of where you might expect in a rate cutting environment, you might expect equities to perform quite strong. But if something breaks or we somehow fall into some deep recession, quick recession, whatever the reason might be, I think you're going to see an opposite reaction from the markets.
If we get the interest rate cuts for the right reasons, investors are going to get to keep the chocolate and the candy that's in the Easter basket. If we get it for the wrong reasons, the Easter basket for investors is going to look a lot like the Easter baskets at my house for my daughters Caroline and Claire, which is to say there's nothing left in the basket at all. Do we have an empty basket, or do the early returns that we got, S&P up 10.5%, international stocks up 6%, strong returns from small cap and mid cap stocks domestically, commodities up, gold's hitting an all-time high.
Yeah.
Do we keep those, right? And I think that's a central question moving forward. For those friends of the firm, obviously would love to have a conversation with you about our views on the markets and where we're taking client portfolios. We're certainly excited about where we sit, and really, I think hopefully by the next time we tape this, we'll find out whether baskets look like the Staley household, empty, or whether we get to keep some of the candy and the chocolate that was brought to us in the first quarter.